Hi, this is Randy Finney with the Right Side of the Chart, and this is an early session update for Wednesday, September 25th, 2019. Just wanted to get a video out to you guys. I posted several charts this morning. I know from feedback from a lot of you guys it's much easier to look at the charts, and I did that. However, there's so many nuances, so many variables, details that it's really the only way for me to convey it all. Or at least a good part of it is in these videos. So let me start out with what's happened so far since yesterday. All right, we went down, as I posted this morning, we came very close, within 1/10% to those targets on both our NQ, the NASDAQ 100 futures, and RTY, the small cap futures. And then posted some updates. I showed you we had small divergences there. And they did. They played out for a little bit. Small divergences, small rallies so far. Then, as I said in that opening post this morning, or pre-market post, it wouldn't surprise me at all to see them step in and sell it at the open, sell into that rally. And that's what they did. Why? A couple reasons. Number one, although NQ, which by the way, NQ now has hit that target, that 76,750 target, and RTY as well hit the comparable target. Which is here, 1528.50 or so. All right, so those targets have been hit, and they're pretty decent support levels. Where I'm going with this right now, let me just be very clear. The risk reward for shorting here is not very objective. You could certainly make a case to go long. In fact, it's skewed more that way, but there's some little caveat or asterisks I'm going to put in there. I put these in yesterday. There are a lot of the major indexes, the tech sector, as well as a lot of market-leading stocks are at just below, and a couple even breaking some pretty critical support levels. So while normally, if we didn't have that going on the daily charts and all the other potential or close to pending sell signals on the daily and weekly charts, I would say absolutely this is a great place to step in long. Cover all shorts and go long for a bounce here, because again, you have the small caps at support. I just showed you have the NASDAQ 100 at support on the futures, and ES, the S&P 500, it is at support. I added a line there this morning, or yesterday actually, but I put it in the chart this morning, 29.58.31. That's that previous reaction low, some reactions over here. But if you'll notice, ES has still not hit that the top of that August trading range. It's come very close, and what's odd is SPY has actually come even closer. I have the range on ES from about 29.45, 29.46 we'll call it. It's closer down to there, whatever that is, 29.39. You can hardly make it out there. And you can see we're close. So that's again why the risk reward's not very favorable. But I do think we're going to get a thrust down. We have these divergences. Divergences don't have to play out, and they can also very much extend. So it could look something like this if we continue to drop. Why do I think, why am I leaning that way? But again, my convictions aren't high because we're so close. Let me go to the SPY chart, show you something. Here's SPY. And if you remember, it's pretty clearly defined, that 294 level. Lots of reactions from the top of the August trading range. And there are a lot of traders that only trade SPY, including a lot of institutions, or they'll trade the futures during market hours, 9:30 to 4 p.m. Why? Because they don't have, if you run a multi-billion-dollar hedge fund, you don't have your position sizes are too big to maneuver in the relatively liquid after-hours overnight session in the future. So that's the realm largely of the retail trader and maybe some small institutions. There's some hedging and things going on, don't get me wrong, but so what I'm getting at is a lot of eyes are probably on watching SPY, and SPY came within spitting distance today so far. The low of the day on SPY was 294.33. 33 cents on a $300 security, as you realize, is a fraction of a percent. So it's not much. It was very close, and maybe that's all it needed. That's the in other words, I'm making the case that the downside potential is not very large at this point. Maybe another jog down to kiss it, to leave no unfinished business behind. Again, we came a little more shy of that in the futures. And let's see if these flags play out. So far, we're kind of just holding up after the open today. Remember, we had a bear flag the other day, then we had another thrust down, set up another flag. We broke out of it today. And look, there's a possibility, and this is why I say you always have to be flexible, ready to adjust. Maybe we smash on down and these flags play out, and that takes us down below 294. We'll see. But again, we're at, I just showed you NQ, the NASDAQ 100 futures, RTY, and SPY, all at or just a hair above support. And so therefore, probably not a bad idea to book some profits on shorts if you didn't already do so. You've had 2 opportunities this morning. And if you want to just, set a stop, there's a lot of resistance overhead, and allow for those longer term charts to play out. That's those, the asterisks or caveats. Before I get to the long term charts, 186.25 is very good support on QQQ. That was also hit this morning right here. Lots of reactions there. This is I'm trying to grab a circle tool and show you why that line is there at 185.26, because we have a gap there, reaction from above, reaction, big old gap again, another big old gap, another gap, another gap. Okay, so you get it. That is very, very good support right there, and that's what QQQ kissed today. As such, I can make a pretty decent case to reverse from short to long, but there are other things going on as well. I'm going to show you some of that. The trend lines on the daily chart, more significant, are being tested. I stretched this out, I dragged it out, I had it here before, and I've moved it down. Benefit of the doubt. Catch that last reaction there, that reaction low on that candle, and we're flirting with some pretty decent trend line support on QQQ. We've already entered that August trading range on the Qs. And when I look at the market leading tech stocks, the FANGs, here's what I'm seeing. A lot are just sitting precariously on support. Hey, as I like to say, support is support until unless broken. This is probably the more important trend line, because this one's been sliced through so many times. We had a trend line off the lows on the 24th. We might need to move that out a little bit at this point. And this trend line captures more of the recent reaction lows right here, more of the candles you can see right on it on Microsoft. These divergences tell me it's going to break. It's just a matter of today. And if so, that would bring Microsoft down here to at least 131. It's at 137 right now. And then there's some others I wanted to show you as well. Apple's hanging in there for now. Let me give you a different board here. There's Apple, but there's a pretty key trend line right there, 216.41, big level, and it's sitting on that support shelf. So you have a lot of market-leading stocks just above or on support now. Here's one that broke support. Here's Amazon. There's a pretty decent trend line there, broken, as well as that 1752 level. Normally I'd say short away on Amazon, but not going to go down too far if the rest of the FANGs hold up. Microsoft, Apple. Why? Because they're indexed. These guys are all wrapped together in one big package called QQQ, or the NASDAQ 100, as well as the S&P 500. So that's why you're not going to see it. It doesn't mean Amazon can't fall, but it is a breakdown in Amazon, but it's not confirmed by those other ones right now. And that's what I want to show you. So that's what I'm seeing here. I'm seeing a lot of these stocks. There's Alphabet, broke down from this trend line here, has been back testing, and it formed this channel with this minor trend line. Any much more downside, and it's going to break down as well, but it's still at support. That's the common theme of this video. A lot of these stocks are in precarious position, technical postures. Facebook already broke down, so you have a lot of these. Some of these FANGs are starting to break down, and that's why I think the upside's limited in the market. But until the rest break down, see, that was a breakdown and back test. What I just drew there. This is your uptrend line right there. There was your divergent high, and that was the top so far. PPO being rejected at trying to cross back below the zero line. So here's the thing. If you are playing the long game, I think it's a good time to be short with a starter short position. Wait for some additional evidence to add. And then, if these guys, if the rest of them happen to hold support, and then some of those that broke down like Amazon and Facebook recover, maybe we're going to get another thrust higher. I don't think it's going to happen. I'm favoring that we're probably in the process of starting to break down now. Today should be telling. Like I said, why? Because it all goes back to this. I've been calling for this for a long time. SPY to come back in and test the top of the trading range, which it has now done. There's the in blue here. This is your August trading range, and we've effectively tested it, like I said, within 1/10% or so. And so that's what the bulls want to see. They should be buying. They're stepping in so far, and how far they can take it, that is going to be very telling. This is their moment. This is the bulls' moment. Here's a 1-minute trend line on SPY. Maybe they pop this. There's still plenty of resistance overhead as well. But let me get this video out to you guys and keep it just limited to the broad market analysis here. There's so much more I want to cover. Just so much more Treasury bonds. I'll just, just so you can see them now before I can get to the next video. Look at I have a shorted ZB as a hedge today to the shorts earlier, which have since been covered in reverse because we're at that resistance level. I don't even listen to what I'm saying and doing, because by the time you get this video, I may be back short again, or have covered this. In fact, that's actually where I was targeting, so I might have already filled that order there, targeting a pullback to the trend line. You also have the 162 support. But what I want to show you there is this is a key technical level, and all this stuff goes together. This is why I told you I'd stick to just a broad market stock market on this video to get it out to you, but it's so interrelated. These are Treasury bonds. They rallied up. That's a big level. A lot of reactions there. That 163.70 level, I'd highlighted it before, probably back here, I believe, in a breakdown. That was a short entry there on Treasury bonds. I've also highlighted way back here when we broke out of this. I said pullbacks to this trend line would give you objective long entries for Treasuries, and that did you well. If you trade, trade ZB, you know what I'm talking about. You get a small blip. This move right there is probably well over $1,000 in gains right there, just shorting at the top on one contract, because they're pretty heavily leveraged. Excuse me. But watch Treasury bonds. Treasury bonds just failed at resistance. If they break this, the stock market rallies, then there's more downside in Treasuries, and that kind of confirms a rally in equities. And that's what I was trying to say. These all tie together because bonds are risk-off assets, and when they're rallying, it's a bad sign for the stock market, especially if the market's going up as well. ZB also hit resistance today. There's trendline support. Also, like this is ZN. I'm sorry, the 10-year bond. Also, like ZB, it had divergence at the high right there. I didn't draw those divergence lines perfect, but that's your negative divergence. So I just see so much in there. Gold too. I'm still talking. I know I said I'd get the video out to you guys, but these are the important things I'm seeing. Same thing, I had thrown on a short on gold because it also, just like Treasury bonds, had hit a very key level, and that was at the time a hedge to the shorts, but of course those have been reversed, so might go back into those. Let's just say it's clinging to that trend line. I can drag that trend line. I had it right there, but you can see there's a reaction there. Let's just say gold right now is at support. Had also negative divergence when it ran into that resistance level. So here's what I think is going to happen. Even if it breaks down soon, and I might have already had that one also hit the target. I was just targeting to pull back to the trend line. Even if it breaks down soon, I suspect the markets are about to roll over soon. And if that happens, it'll be a fake out, and gold's probably going to burn through those divergences and run up. Same thing with Treasury bonds and all that. And then gold, as I told you, I believe gold is still in a bull market. Bull market's been consolidating for the last few months in this range because it got very overbought, and everyone was too bullish. Everyone that didn't want gold earlier in the year when it looked great on the charts, they wanted to buy it, after a tremendous run. They need to get out of there. You have too many longs, too much bullish sentiment. You need to clear that out to make room for the next leg up. So this is a potential scenario. So I'll be watching this, and for maybe the next longer term swing or trend trade entry on gold. Otherwise, look, the markets can hold up. and rally from here. SPY just back tested the top of that trading range. That's where I said if I was longer term bullish, I'd be buying with both fists, and I have no doubt there are bulls doing that today. So therefore, if they're right and this market has a lot more room to run, then guess what? Gold, this breakdown in gold will stick most likely, and at very least probably bring us back down to that key 1492 level. And if that goes, there's even more downside. So let me wrap it up here. I'll go over the rest of the precious metals, silver, platinum, palladium. I'll do that in a separate video. Bitcoin finally broke down. If you check, just do a search on the site for Bitcoin, and month ago, 3 weeks ago, I mentioned a level. I said, is Bitcoin about to drop 25%? And I said if it broke BRR, the Bitcoin futures, broke the same support levels I mentioned yesterday. I put it out as a long setup and a short setup. I said long if it breaks over this trend line. Here, I'll show you what I'm talking about, even though I'm still going here. This is it. This is that post, and so again, the one from about 3 weeks ago, and showing you GBTC, which is one vehicle for trading Bitcoin, and then the futures BRR, and that was the big level there. And they broke down, and it was a big drop yesterday. Like I said, that was a very, very important support level. And so, like I said, there's a lot out there right now, and I'm going to cover these a little more detail in a separate video. I'm going to wrap this one up here, get it out to you guys so you can decide what to do. And as I say, if you're unsure, because we're at a point in the markets, I believe, where they're either going to hold these supports, and if so, rally, and it could be a substantial rally now that we back tested that level in SPY. Otherwise, we can trigger some more powerful sell signals, and they can just burn right through that August trading range on SPY. QQQ is already in it, could take it down to the bottom and well beyond. So let's stay on our toes, and I will provide any updates as anything changes. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.